Hi everyone, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and I just do this just to help you guys prepare for the week ahead. So this is my macro outlook, and that's followed in a second part that I do where I analyse a few charts of products, some of the products I trade. Okay, so last week we saw stocks rally again before falling late Friday. There was a couple of things. I mean, obviously PPI was higher than expected, and also consumer sentiment came in lower than expected. Now, the stock indices had yet sort of again made new record highs. The Dow was boosted by bank earnings, although there does seem to be more stock rotation going on. That people are moving some of their portfolio out of tech and possibly AI and into other sectors. Although that said, Nvidia did bounce back. Investors just can't seem to get enough of that stock, can they? Interestingly, the yen ended at a 4-week high. Some of that's Bank of Japan intervention, but also dollar weakness came out during the week. So oil turned late Friday as expected. It's just sort of weaker demand and lower Chinese imports as well are also impacting it. So it came off $1 very quickly Friday afternoon, WTI. Now towards the end of the week we had US CPI came in lower than expected. So everyone's thinking, yay. And then on Friday, PPI came in much higher than was forecast, double. In fact, month for month, it came in at 0.4, where it was expected at 0.2. And that made it 4% year on year, which is 0.5% higher than expectations. Now, when you look at CPI versus PPI, this could really sort of reflect lower consumer demand. And companies may be now just sort of reducing their profit margins, finally, of course, except for the tech sector, I would guess. Because, of course, they want to keep trying to attract the consumers back in to buy their products. Now, Biden remains adamant he will stay on as the Democrats' nominee. But, again, time is running out to replace him. I just see this all playing into Trump's hands, really. If there's no more sort of shooters, obviously someone tried to get him the weekend, and he was lucky this time. Now, interestingly, will that give his ratings a boost? In fact, Bitcoin rallied on the news. It seems Hamas are pulling out of talks and Houthi continue to attack ships. There's tension increasing between Israel and Hezbollah. It's sort of Israel versus the 3 H's, isn't it, really? Now, gold had quite a strong week, back over 2,400. As I mentioned earlier, that the dollar sort of got pretty much bashed. Traders becoming more confident Fed rate cuts are on the horizon. And potentially some of the others may have to sort of wait longer. So, it's keeping those currencies up a little bit higher because traders are focusing more on rates, yields, than they are actually on economies by the looks of it, which I think is a bit disappointing and short-sighted personally. But, who am I? I'm just one trader. So Bitcoin was under pressure with all of that German government offloading. However, it did get that boost from Trump being attacked, so that was interesting. Now, this coming week, we've got a few central bank speakers. There's more corporate earnings being released. If we sort of look at the US, we've got retail sales, and again, that will provide insight to sort of consumer demand, and then housing data reflecting sort of those higher interest rates. Industrial production and capacity utilization, so what's going on in industry, and then jobless claims. It comes out every Thursday, so we tend to sort of almost ignore it, apart from after COVID, of course, then when it came a major number. But we should pay more attention to it again, I think, now that unemployment is creeping up. You know, in the US it's gone from 3.4% to 4.1% and looks as though it's going to go even higher yet. Also out this week is one of my favourites, the Beige Book. For me, it provides more of a personal view from the Fed members rather than just being purely data driven. Canada CPI, Germany's got ZEW and inflation data. The EU's got ZEW, inflation data, and of course we've got the ECB rate decision, which I expect to be unchanged. Reason for that is I think really they committed themselves too early to the last cut, so it'll take time before they can do the next cut at the moment. Again, it's inflation. In the UK, we have inflation data, retail sales. Again, we're going to see what's going on with the UK economy. Employment data. Now, with the employment data, focus on the average earnings because the Bank of England do. And consumer confidence. And a big question there is, will it start to improve now that there's a new Labour government? Okay, so that's pretty much it. For my macro, there's another couple of slides and then I'm going to move on in the second part, which is where I just do some chart analysis for you. Hope to see you next week.
Now I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.